I'm such a rookie.
I'm in Santa Fe, New Mexico at our Rosewood Hotel, and I'm outside in the beautiful air and mountains, blue skies, sun is shining down.
You sound a lot better. Aaron Bree, will you put, hey, I'm echoing in the office. Will you put the pro chart on the screen? Okay, thank you. So you're in Santa Fe, you said at your Rosewood Hotel?
Correct.
Wow, I didn't know you had that.
Yeah.
All right. Do you own the Rosewood do you own the Rosewood Mayakoba as well?
No, but I know who does.
Oh, okay. I should have talked to you.
Well.
Have you been to Puerto Rico at all lately?
Yes.
I was
through the drug distribution trade business. We've looked at stuff in Puerto Rico for many years.
You should come visit your boy J Raz, who may be moving out there.
Okay.
I was just
that's interesting.
I was just in a Dorado Ritz-Carlton Reserve. Quite the place.
That's a very special property. I have been there.
You have? Okay. I was there for a week looking at houses, the whole thing, man. I don't know.
Benzinga must be making some bazooks. Nice.
Benzinga
nice. Good living.
Benzinga's grown a lot since we've talked. We're like we do more revenue and profit than probably like 20% of the NASDAQ companies now. So you know, we're getting there. We're not at Reuters levels. I mean, this is Zinger. So you're on Zinger Nation, and it's for us, by us. We all build this thing together. So now I wanted to bring you on because you have a SPAC, BOA Acquisition Corp, BOAS.
Correct.
You're a real estate guy. You have some smart people involved in your SPAC. What can you say about it? Why did you guys decide to do this? And actually, forget that. Forget those two questions. Tell us about your background a little first. Then we'll get to those questions.
Sure. You know, I wanted to be a professional basketball player, and I got cut from my high school varsity basketball team. But I was a really nice guy, and I was a hard worker. And the coach said, "Hey, you can sit on the bench and cheer us along." And I tried to do that, and I couldn't do that. And I realized I had to go and create something. And I started with a little internet company that I was able to recapitalize and make a little bit of money back in the late 90s. And I've just always been an entrepreneur. I've always been a doer, an investor, a builder, a creator. And I've only been able to really bet on myself and get people to bet on me. And so it started off with a little company. And then I was planning on having a little venture capital fund. My close friend and who was going to be my partner, a guy named Ted Adderley, heir to Kelly Services, died in 9/11. I was supposed to be with him that night, that day. That really changed me. I went and worked for the government as a snowed-in government contractor. I worked for the CIA, the DOD, Department of Energy, Administrative Office of the U.S. Courts. And I figured out stuff. But really what I did is I bought stuff for them. I went to school at night. I got my MBA. I got my master's in accounting, my master's in finance, a CPA. I would work all day. I would study all night. Then I would party. And I partied a lot. And by 2005, I knew exactly what I wanted to be. I was 26 years old. I left the CIA and went and worked for a pension fund advisor so I could go invest money and have access to real money and be able to buy what I needed to be able to buy and learn and be around people that had big money. And I was a pension fund advisor for 3 years. That turned into me being a whistleblower by what I saw. And I invested throughout that time. And then 2008, I was 29. I founded Friedman Capital as my family office to go invest alongside other really smart people in spaces that I could touch, feel, understand, and add value on, or just invest and get the fuck out of the way. And I invested in all sorts of real estate transactions. I built all sorts of real estate. I also invested in operating companies, very focused on our private equity investing, but all were entangled in things that we understood. And at our core, we're distributors. My family goes back in distribution, drugs, and one of our large investments is in pharmaceutical distribution. So after doing a couple $2 billion in real estate, I said in 2019, second half of 2019, my plan was I just basically finished buying and selling about 20 real estate transactions with a real thesis of moving from retail into workhouse, residential, hospitality, hotel, office building, really owning strategic core markets like Washington, D.C., where I live, where we bought the Watergate office building, where we built the Line Hotel, which is a $150 million, $180 million project, where we built a bunch of apartments, where we built senior housing, where we had an understanding we were local. We also went into Charleston, South Carolina, and South Florida. So after completing this transition from 17 to 20, call it, my plan was to take some time off, not do any real estate deals, and get us back going. And it was March 13th, 2020. And I'm on the phone with these investment bankers, Goldman Sachs, and they want us to do a $500 million SPAC. Well, I'm being interrupted by my student housing portfolio melting down, being told all the students are being ordered to leave the College of Charleston, University of Florida, they're being ordered to leave, Arizona, they're being ordered to leave. Oh, shit, it's the nursing home portfolio. We got COVID. Oh, shit, it's senior housing. We have lost all leasing. Oh, our apartments in Washington, D.C., the government contractors are telling the people to move out. But I'm still on the phone with the bankers, and they're still talking, and they're still pitching. And they're selling, come on, we can do this SPAC. You got connections. You know how to build money. You know how to build companies. And I said, man, the world is melting down, but they are still pushing me on the SPAC. So I said the words, not because I like Donald Trump or anything political. I said the words, bet on America. And they kept talking and talking about all the SPAC and all the liquidity and all the things we could do. And then I said, never bet against America because of what was happening in the world. Well, as an entrepreneur, I trademarked those words. I worked through my real estate, which was hell, because I had hotels and I had student housing and I had senior housing and all that stuff, and I got it all worked out. I got one deal bought, and then it was November, and I went back to SPAC. And I said, it's time to turn that SPAC back on, and we turned it on because I was through my real estate, and we pedaled to the metal. I didn't have a Christmas break in Aspen. I worked. I didn't have a Christmas break in Palm Beach. I worked. And I did calls, and I got a SPAC that was well oversubscribed with the idea that we were going to go bet on companies and be in the SPAC business. And just like how I went into the hotel business, I didn't go in to do one hotel. I went in to do 100 hotels. I didn't go into the drug distribution business to buy one company. I went in to do a roll-up. I was going into the business. So I'm going to go into the SPAC business.
You like that?
I'm only as good. I love that. So I'm only as good as my last SPAC. So if I was going to do this SPAC, that's my brand, right? So here we are. We're in the SPAC business, and now everybody's raised a SPAC. There's a ton of SPACs in the space, and there's a ton of liquidity. But don't worry, we have no fear because we only bet on things that we use and understand. We have that Peter Lynch mentality of investing.
Okay. Good. That's good. All right. Now, Brian, we got the background. All right. You've done it. You've made stuff happen. But in the chat there, I know you don't see the chat. The chat is BOAS. BOAS. Okay. I know you don't give up on anything. You make things happen. You have your whole life. You always have figured it out. Okay. My question to you is like, what kind of stuff are you looking at? Can you give any insight into what size you're looking at and type of things you're looking at?
Yeah. So absolutely. One thing is because we went into the SPAC business, we made sure that we had people in our sponsorship group that would help us get through, anything, a big deal or a small deal. So no deal's too big, no deal's too small. We have a ton of capital behind us, and that's especially important for our pipe, which helps us be a differentiator. I built my real estate portfolio being able to have big capital behind me. So when I said to somebody, I'm going to buy this deal, they knew I was really going to buy it. And I was able to put my deposit down and go hard and show that I was there. I'm only going to be buying and investing in things that I know and touch and feel and that I work with every day in my businesses. So to give you an example, there's a little company out there called Toast. Toast changed how my restaurants, which I own a bunch, and had the ability to do delivery in COVID. I have restaurants and hotels. They had no way of plugging into Uber and plugging into those food delivery systems. They didn't know how to do it. Their cash registers didn't give them the ability because they were Micros, which was attached to Oracle. This company out of Boston that I knew about that I was using on other hotels called Toast popped up. That company, going into COVID, had a $400 million valuation. Now, that company is going public via Goldman for, I think, $20 billion. But that is an example of a company that I was using in my business and was like, that's the future. And any of those guys that I'm going to be, anytime I'm going to have to redo a cash register, any of my hospitality and any of my hotels, I'm going to use that company. So I went after them to find out that, they were already going public. But that is an example. We only are going for things that we can touch and feel. There are certain software that I'm using that gives me the ability to meter my properties as a technology, right? So I don't have to be in Birmingham, Michigan anymore, or be in Tucson, Arizona to know what the electricity bill is and to fight with the tenant over what they owe on their electricity bill. It's all done in the cloud.
Some people use
30 companies.
Some people use Itron for water meters. Itron, ITRI. It's a stock I've owned for 12 years. They do metering of the water, not electricity, but water. So just letting you know.
Right. So those companies that I use have been weeded out. And so over the years, there's only 2 that we use. When amongst our portfolio of 150 properties, there used to be 25. Because I'm a 42-year-old guy that has been investing in real estate since I've been 20 years old. The only thing that I could bring to the table was some chutzpah, some energy, and the idea that we needed technology. I've always been a technology investor. So I have to hand it to Casey Berman because he created the phrase prop tech. But I've been a prop tech investor.
Who do you hand it to?
Casey Berman out of Washington, D.C. Casey Berman created a venture capital fund years ago to be prop tech investors with the thesis that his family, Berman, owned a bunch of real estate, and he came into the family and he wanted to really, revolutionize things. And he could do deals and lose money, right? Or he could do deals and make money, hopefully. But he could also add technology to make his properties more efficient. And so in doing so, he figured out which technologies he liked and were game-changing. And then he created a fund that invested in them. One of the companies they invested in is called Latch, which is a SPAC, which would be a comp to what we're trying to do.
All right. So they want the Brian back that doesn't talk all business. It talks about the partying days back in the day. That's what they want. They want the Brian, that guy who looked like he was about to go snowboarding. But Brian, I mean, Brian, how hard is it to get a deal done?
I don't think it's that hard to get a deal done right now. I think
for the SPAC. Okay.
For us, I don't think it's hard. I think it work because there's a list of 20 things that we're working with and working on that are changing how we do business day to day. And those companies all used to grow in future funding rounds, right? And now the most efficient, lowest cost of capital and smartest thing for them to do is SPAC. And these are my vendors. I'm customers to them. So I understand which ones are more effective. And then I can actually invest in them and roll them out in my real estate properties to give them, organic or inorganic growth.
Yep. No, so when should we look for an update from you guys? BOAS. When should we look? When just hang out, or when do we think we should look into it?
I think you should always be paying attention to what we're doing. Obviously, you should always be paying because we're going into the business. We should definitely be somebody that's on your radar. These are vehicles that we're going to be doing for the next 50 years. We're a really big believer in this business, and the best people that are in SPACs, they've got 25 of them. So that's kind of our plan.
No, I hear you. It's all right. So you're where are you again? You're in
I'm at the Anasazi in Santa Fe, New Mexico, which is managed by Rosewood.
Got it. Okay.
And I am out in front because I didn't think the internet was good enough inside. Talking to myself, the birds are chirping, the sky is blue. And we have our own tequila, which is really hot and very expensive. And I can't believe the liquidity that is back in the market. And the luxury traveler is back. And it really feels like COVID is over. And the roaring 20s are here.
It's unbelievable. I mean, to get the Ritz the availability was so low. It was insane. I had to drop Benzinga to even get a room. And, if you have your own tequila, well, you find a product, I could sell it. Google top sugar-free champagne. What's the first result? Benzinga. I'll explain to you later, but find me some products I can sell them more than most people can. Your tequila I probably can't sell because you're probably charging like $3,000 a bottle. Knowing you.
Well, we have three lines actually. We have the $20 bottle.
All right. So the $20 bottle, give it to me. Call it the Benzinga bottle, and I'll sell the shit out of it. I'll sell 1,000 bottles a week. Easy. Maybe 1,000 a day. I don't know, something like that. But we'll see. So, guys, the symbol is BOAS. Brian's an entrepreneur. He follows Warren Buffett. He talks about Peter Lynch, as you heard. He probably likes, Warren's partner, the whole thing. He gets it. He likes to make money.
Seth Carmen from Bell Post.
Yeah.
Seth Carmen from Bell Post is a mentor of mine, and I'm very impressed with him. He wrote a book called The Margin of Safety.
Okay.
And I read that book every year as a reminder of how to trade, because that's all I am, is a trader and business builder. And it's very helpful. I highly recommend it. I teach a class at Georgetown University, and when people ask me, what should they read, that's the one book I tell them to read.
All right, Margin of Safety, Seth Carmen. Bye. You heard it here first. Brian, when you have news or anything to announce on BOAS, hit up producer Aaron Bree. Maybe he won't forget next time, and you'll get him on, and he'll get you on. But 600 people or 1,000 people just met you, and they're going to look up at the stock and follow it, and talk to you soon, and maybe I'll see you at the Rosewood soon.
All right. Thank you. I appreciate it.
All right. Thanks for coming on. So that's Brian Friedman, CEO of BOAS.